Big week coming up this week in the stock market. And if you're new to our channel, this is our new Everything Money 24/7 channel. If you want to see 4 or 5 videos a week where we react immediately on earnings releases, economic information, etc., please do me a favor, subscribe to the channel, and I guarantee you'll get some great information out of it. But before we get into next week, last week was a pretty big week in the market, Mo.
Sure was.
I'd like to welcome Mo back from Florida. He's back to living in Ohio. Thank you very much for coming back here. When do you move back to Florida permanently?
Tomorrow.
No. Seriously, when?
October, November, somewhere
What a
there.
dickhead. All right, so the Dow Jones up only 0.74 this week. S&P 1.54 and 2.11% for the NASDAQ, the tech-heavy NASDAQ, with a couple of big reports coming in this week as well. Now, where does it take my ever so famous stock market to GDP ratio? It's not my famous one. It's Warren Buffett's single most reliable metric at any given time of levels. Guys, we're back over 100% overvalued, 101.7%, fair value of 2630. It's incredible. And that doesn't mean that just because it's the case, you should sell your stocks. No. Stocks over time go like this, but the prices go like this. This is why we preach dollar cost averaging all along the way, because sometimes you're going to overpay, sometimes you'll underpay, but over time, you will basically match the market. Now, right now, there's just exuberant times. Why? I have no idea.
Yeah.
We have the interest rates right now, 90-day treasuries at 5.4%. For those of you who are savers, that's a great thing.
It is.
It gives you a good return on your cash, right? But I bring this up to show you that, guys, it's very difficult for the next 5 or 10 years to be like the last 5 or 10 years when you start at levels like this. When you start at these levels, guys, it's just very difficult to make great returns. The more you pay for something, the worse you're going to do. The lower your returns, because every investment's the present value of all future cash flow. That's just a reality. Now, unless we see major economic growth, which, by the way, we could, right? If inflation, but that takes a lot of inflation for that to happen.
Right.
It'll really drive nominal GDP growth.
Right.
You got to decide for yourself what's most important there. Now, for those who think that that's a unreliable metric, well, this is the 10-year cyclically adjusted PE ratio, which takes all the earnings of the S&P for the last 10 years, brings it to today using inflation, and divides it out. And guess what? 103% overvalued.
Wow.
That's incredible. That's absolutely incredible. So it's more overvalued than the stock market GDP ratio. Again, doesn't mean you sell everything. It just be ready for a more cautious future in investments. But as stocks fall and you dollar cost average them lower, you're going to do quite well. Mo, what's on the agenda this week for earnings?
So we have some earnings that really start tomorrow. Lowe's, AutoZone, those are the big ones coming up. AutoZone, we love that company.
Why do we love AutoZone, Mo?
I mean, they are the poster child for what it means to buy back shares, not dilute your shareholders, not pay a dividend for no reason.
And I want to recover this because this is so important. Again, they don't pay a dividend. This is a $52 billion market cap business. Look at the stock price. Back to 2000, $32 a share. It's now at 3,000. So basically 100x. So is the revenue up 100x? Is the profit up 100x? Well, let's go back and look. Revenue is $52 billion, profit of 2.6 right now. So according to that, we would need revenue of 500 million back in 2000 and profit of 26 million. What did we have back in 2000? We had 4.5 billion in revenue and profit of 270 million. So profit and revenue up 10x, the stock is up 100x. And you might sit there and say, well, yeah, because the PE is insanely high.
No,
Guys, it's 20.
Yep.
It's 20.
Basically
Why?
market average.
They bought back shares at the right price. That's what they did correctly. And that's what we're trying to teach on this channel. I'm not endorsing AutoZone. I don't own AutoZone. I'm sure at some point in the future I'd like to, but in the meantime, you got to sit there and say, what is going on here? This company buys back the right shares.
This is what you want to emulate if you're a company.
Yes.
As far as capital allocation goes.
Correct. Exactly. So what else? What else on the board? NVIDIA's reporting this week.
Tomorrow, Wednesday, NVIDIA, TJ Maxx. NVIDIA's the big one. Target also.
So I'll be interested. So I own Target shares.
Yep.
I want to own TJ Maxx. I do not own NVIDIA. Just it seems absurdly high to me, or I can't understand what their growth is going to be from here. But I look at Target and TJ Maxx. I want to see what their same store sales growth is, because Target's coming off of some declines in same store sales. even though Walmart reported last week with big growth in their same-store sales. And same-store sales is very important, guys, for any retail business.
It shows how strong the consumer is.
So I would think to myself that TJ Maxx is going to report, because I think the consumer isn't doing as well as numbers report out there. I thought that was very indicative by Walmart's strong same-store sales. As middle-class people sit there and say, wait a second, I'm feeling a little tight from inflation. Let me go find better deals. I think Target's reason for a decline in same-store sales is mostly driven by perception and things like losses and being a little bit tighter. I could be wrong, but I was buying Target from 135 and I looked pretty dumb as it was going down to 100. And now it looks like it was a smart move. But I'm hoping I look dumb again because I want that stock as low as possible so I can buy more shares. Yeah. But remember, don't ever buy a company just because somebody on the internet does it. We're here to teach a process. We're here to teach learners, not lemmings. If you're a lemming who wants to go buy this stock, we're not the channel for you. There are plenty of shysters out there that you can go to that'll claim to be brilliant. We're trying to teach a process that you can apply to any investment you do in the future. Thursday, there'll be existing and new home sales reported on Thursday. Boy, Mo, every time we talk about home sales, we just look at the prices out there and we go, how did this happen?
I know.
You saw interest rates go from Lisa's 2.625% to 7.25% right now. You know, a good interest rate right now is 6%. You know what I mean?
Yeah.
Oh
really good.
Yeah, really good. That's what I mean. It's like, oh my gosh, you look at this thinking to yourself, what is going out there with home prices? Well, it's a lack of inventory. So home builders are going to make some good money being able to add more inventory to the market and getting people locked in. Because guess what? Nothing's more scary than when a price goes on the market and you know there's going to be multiple bids and you know you have to jump on it as fast as possible. Yeah. But for new home builds, if they're building a new neighborhood, hey, which lot do you want? That one? That is your house. It's done. So my guess is new home sales are going to be pretty decent. I'm not here to guess what's going to happen Thursday, but I'm not the believer that we have a crash coming in real estate. Yeah. I don't believe that.
So this always surprises me when I look at like Pulte Homes. They're like basically at all-time highs.
Yeah, it's interesting.
When you look at a KB Homes, basically at all-time highs effective last week. But it's very interesting when you hear interest rates where they are, but it does go back to the supply and demand issues.
Yep, supply and demand is everything here. Yeah. Because if you have a 3% mortgage, why are you selling?
100%.
Because you have to.
Yeah.
That's it. Listen, I have 2 stepkids that both own homes. And we were talking yesterday at dinner going, hey, do you guys want to move? Yeah, they want to move, make one more move in their lifetime. And I said to them, if you guys even think about selling your homes, I'm going to murder you. I was like, you better rent those things out and keep those interest rates low. 100%, right? I told the story of Tim, our producer here. He and his wife sold their home so they could put money into their new home. And unfortunately, they never put the money in their new home. They should have kept their house. That house would be worth a lot more than they sold it for, and they'd be getting a lot of rent, and Tim would be wearing Rolexes and gold chains and diamond-encrusted teeth. And I know, Tim, if you met Tim, you'd say, like, oh, yeah, he's definitely going to have that stuff on him.
100%.
He would have Jesus' cross, his height and weight in actual gold. Thank you, Chris DiStefano.
Dunkin' coffee.
Yeah, Dunkin' Donuts coffee, flip-flops. So, next week, though, Mo, the big lead up to the Fed meeting.
Yep.
Fed meeting. It's the time we all take a dump on Fed Chairman Powell, even though he should be revered for how he's handled inflation. What does it say, Mo?
The Fed Watch tool right now, guys, there's a 96.5% chance that rates remain the same.
Yeah. We came from 5 months ago when rates were going to drop 6 or 7 times this year. And now they're expecting 2 rate drops. Guys, it just goes to show we have no idea what's going to happen. No idea what's going to happen in the future. No reason to try to make bets on it. Even for my Thursday bet, when I said about existing, I didn't mean like literally I think the numbers will come in good. I just mean over long periods of time, new home sales prices will continue to go up as we have inflation. That's what drives value. So guys, again, if you want to hear more of these reactions later this week and in the future, subscribe to our channel. I appreciate your time.